and good afternoon, and welcome to our latest Thomas Westcott webinar. My name is Patrick Tigwell. I'm a general practice partner at the Exeter and Tiverton offices of the firm. And again, it's my pleasure to be your host for this afternoon's webinar. It's been a crucial week, really, with the government confirming what the job retention scheme, the JRS, will now look like up until the scheme finishes on the 31st of October. They've also given guidance on the next slug of SICE, the Self-Employed Income Support Scheme, and more on that later. And additionally, the discretionary fund grant has now gone live across local authorities. So I know there's probably a sort of a 6-minute window to apply, but again, we'll have more on that. And actually, to give us the update on these, I'm very pleased to welcome my tax partner colleague from Plymouth, Ian Pring. Now, Ian is a member of our TW COVID response team who are responding to government announcements by blogging and disseminating information to businesses. And you know, I liken him to being a bridge really between the government, what the government is saying here, and what it actually does mean, even an air bridge, if you like. So I'll turn to Ian in a minute, and then after that, after we've had the half-time oranges, the next part of the webinar will be access to finance. And in particular, how the C-bills, so the Coronavirus Business Interruption Loan Scheme, and B-bills, the Bounceback Loan Scheme, are working in practice. And what do you do as a business owner if you're struggling to obtain the finance your business needs? And to explain this part of it, I'm delighted to welcome our guest speaker, Tim Jones. Welcome, Tim. Now, Tim's the MD of StartPoint Finance. They are one of the Southwest's leading providers of alternative business finance solutions. They're a finance broker that can access whole market, and they have a range of finance options. When I looked at their website, there's at least 9 strands of finance option there, including asset-backed, crowdfunding, and property finance. They've also got their head office in Kingsbridge, so with the recent good weather, I'm sure they're used to social distancing. Additionally, as ever, behind the scenes, and the face that dare not show its name is Jamie Giles, who's our head of marketing and responsible for the tech. He's also recording the webinar, and we'll send it to you all, the recording after we've done. So what's the plan today? It's a slightly shorter webinar than last week, 45 minutes, I'm thinking. I'll turn to Ian in a minute, then there's some questions on the various updates that have come in, and I can ask him those. Then I'll switch to Tim, and after Tim we'll have, there'll be some time left for more questions. We've had a lot of questions already submitted as part of the registration process, but if you haven't yet submitted a question, you can still do so. The Q&A button is there. And just as we go along, submit your question. If you'd rather remain anonymous, just put anon, and we won't read out your name. As ever, we can generally answer more easily more general questions rather than getting into the weeds of a particular business and a particular business's issues, but we will attend to every question either on this call or afterwards. And if afterwards you think, oh, I should have asked them this, you still can ask your question and submit it to events@thomaswestcott.co.uk. So that's the housekeeping and the intro done. It's over now to Ian for his take on the developments this week. So Ian, over to you.
Yay, thanks, Patrick. Right, good afternoon, everyone. So as Patrick said, there was a number of important announcements last Friday and some of the main government business support measures, and I'll run through the 3 that Patrick mentioned. So first, the Employers' Job Retention Scheme, or the furlough scheme. So as Patrick said, we've had a welcome further, I think it's about the 3rd extension, but final extension to this scheme, and it will then close on 31st of October. It was also announced that this scheme will close to new entrants from the 30th of June. So from then, employers will only be able to furlough employees that they have furloughed for a full 3-week period prior to 30th of June. So what this will mean is if an employer is considering furloughing any particular employee that they haven't yet furloughed, they'll need to do it no later than 10th of June. HMRC have also said that employers will only have until 31st of July to make any claims for the period to 30th of June. And what they're also doing is they're saying, well, it's very expensive running this scheme. So from the 1st of August, employers are going to have to pick up some of the scheme cost and start paying part of the wages for these furloughed employees. So for August, the scheme will continue to pay 80% of the normal employees' wages up to the $2,500 per month maximum. But employers will, in August, pay the employers, or from August onwards, pay the employers' national insurance contributions and pension contributions that are currently covered by the scheme. Now, HMRC estimates based on, I think, about 16, I think under their scheme claims, the average wage, normal wage, is about 16,500. And for that average claim, HMRC estimate that the cost to the employer per employee will be about £69, an extra cost of £69 for August. So when we move forward to September, the scheme will only pay 70% of the employee's wages up to a cap of £2,187.50. So again, employers picked up the employer's NIC and pension contributions, and it will also have to pick up 10% of the employee's furlough wages up to that 80% total, subject to the cap of 2,500. And HMRC estimate that that's going to be an employer cost of £207 per employee for September. And then we move on to October, the final month of the scheme, and the government will only put in 60% of the wages up to a cap of 1,875. So the employer then picks up 20% of the wages, again up to the cap of 2.5, and the NIC and the pension. So that's again worked out on average that this will increase the employer cost to £345 per employee for October. I think the big change was from the 1st of July, they've announced that as long as it's agreed with employees and confirmed in writing, employers can use flexible furloughing to bring furloughed employees back to work part-time and still claim under the scheme for the employee's normal hours not worked. We're waiting for guidance on this so that the flexible furloughing guidance and how employers are going to have to calculate the claims furloughed hours versus normal hours. That guidance is due to be announced on the 12th of June, so I'm sure we'll cover that in a future webinar. So moving on to the, in many ways, an equivalent scheme, the Self-Employment Income Support Scheme. Now, the original scheme, as announced back in March, provides self-employed individuals with a grant of up to £2,500 per month, and that was for 3 months initially. And that was based on 80% of average monthly trading profits, looking back to the 16, 17, 17, 18 and 18, 19 tax years. Now, HMRC determined who's eligible based on submitted tax returns, and they should have already contacted these individuals, inviting them to apply online for the grant payments. Anyone wishing to claim this original grant needs to make a claim to HMRC on or before 13th of July, otherwise that grant entitlement will be lost. Now, it was announced on Friday that we've effectively got a second grant scheme. It's been extended. It'll be a further 3 months under the scheme, and it will be payable in August. And it'll be based on exactly the same eligibility criteria as the original grant. You don't have to claim under both, but why wouldn't you? And eligible claimants received a taxable grant worth 70% of average monthly trading profits, capped at 6,570, so 2,190 per month. The service for the second grant, or the online service, is not yet available, and HMRC are yet to announce when the further grant claim can be made. Now, if you're self-employed and have yet to make a claim, or you're not sure you're eligible, check online using HMRC's eligibility checker, or speak to me or one of my colleagues at Thomas Westcott. Now, as of 31st of May, according to HMRC's records, 35% of potentially eligible self-employed individuals have not yet made a claim for the original grant. So you'll now only have until 13th of July to make that claim. And then finally, the discretionary business support grant scheme, which we've been waiting for. Local authorities have now been provided somewhat limited government funding to award support grants of up to £25,000 to small businesses with high premises costs and those that fell through the gaps of the original grant schemes. Now, these grants are discretionary, but councils have been told to prioritise certain types of businesses, and these are small businesses in shared offices or other flexible workspaces, such as units, incubators, industrial parks, regular market traders, bed and breakfasts paying council tax instead of business rates. And I know Plymouth City Council are saying they'll prioritise businesses which are registered with environmental health and provide breakfast, and Airbnb won't count for that purpose. And charity properties getting charitable business rates relief, which are not eligible for small business rates or rural rates relief. And again, looking at Plymouth City Council's website, they've also said they'll prioritise boat-based businesses, such as fishing boats and tourism-based charter boats, where they're not eligible for the Fisheries Fund. Now, you're going to be an eligible business, or potentially eligible for this discretionary grant, if you're based in England, you've got fewer than 50 employees, you have fixed building costs such as rent, you were trading on the 11th of March 2020, and you can say you've been adversely affected by coronavirus, and there'll be very few businesses out there that haven't been. But note that those businesses will not be eligible for a discretionary grant if they've already claimed under another government grant scheme, such as the Small Business Grant Fund or the Retail, Hospitality and Leisure Grant. So all the local councils in the Southwest, we believe, are now accepting applications for discretionary grants. So check your local council website for details of the application process, and you make it online through your council website. And finally, everything I've said is on our website via help sheets and articles, and is also available on gov.uk. And I'll pass you back to Patrick at that point and hope that's helpful.
Yeah, thanks, Ian. I hope it is too.
Yeah.
Yeah, I'll come back to you on a couple of things here. The flexible and the part-time furloughing. I'd read that, maybe you can confirm this, that from the 1st of July, you won't need to furlough somebody even on a part-time basis for the 3 weeks. It's on a week-by-week.
Yeah, I believe that's the case. I mean, I think that's the requirement for when we get to the 1st of July. Eligible employees must have had a 3-week qualifying furlough period prior to that date. So they're effectively eligible furlough employees, and therefore it will give the flexibility from 1st of July. You can come in for half a day out, and you don't have to sit at home for 3 weeks before you can bring them back in. Again, further details to be announced on the flexible furloughing, but that's my understanding, absolutely.
Yeah. And just to confirm, when the employee comes back, even if it's part-time, they would have to be paid full pay for their part-time hours.
Yes.
And then obviously the furloughed pay. So it's, I think as we were discussing for TW, you know, it's going to be a difficult
logistical nightmare.
It's payroll requirements there.
Yes, certainly with our, you know, as you know, with our payroll bureau, we now have staff working effectively full-time, working out the job retention scheme payments, because it is quite time-consuming and complicated.
Yeah. Just turning to the discretionary fund, we did have a question in from Andrew Southall, afternoon Andrew, saying about potentially getting 2 bites of the cherry, his phrase. But just to confirm then, if you've had the Small Business Grant Fund,
and you won't be eligible, yeah.
You won't be eligible. He also says, can a small charity apply for actually he's saying the Small Business Grant Fund. And I imagine it can, presumably, in common with any other kind of...
If it met the criteria, yes, but obviously if it has already benefited under the small business exception, yeah, then obviously no further grant is available.
Yeah, and actually it's not really a question, it's more of a statement, but my Exeter colleague, Chris Hill, has just said that that actually certain councils are still a bit slow off the mark and are yet to open their applications. And he's referencing Teambridge, Exeter City Council and East Devon. So, naming and shaming. Yeah, so if you're in any of those councils, hard cheese charm, isn't it? So, okay. And so the 10th of June is a key date then, isn't it? Because as you say, this is for new employees or employees who are new to furloughing. You've got to, the 10th is key because then it leads you the 3 weeks before the end of June, and then 1st of July they're able to kind of be eligible for the...
Yes, eligible. You obviously one doesn't have to furlough them later, but you have the ability to do so. Okay.
Right, okay. I think we'll leave that there for the time being. We'll head over to Tim in a sec, because going over to the whole question of finance, and I was just reading some of the stats, the government's own stats about the loan schemes out there, and this is at the end of May, 31st of May, and it's saying, well, the CBILS has loaned 8.92 billion. With 45,800 successful applications out of almost 90,000. So it's a 51% approval rate. And slightly in contrast here, we have the Bounceback loan, the BBILS, 21.29 billion. So sort of 2.5 times more, with almost 700,000 successful applications out of 873,000. So it's an 80% approval rate. So it's definitely the sort of the star of the show in terms of raising finance. So I'd like to switch over to you now, Tim, for your sort of take on the access to finance sort of environment and your experiences of these loan schemes and alternative routes to finance. So you've got to unmute yourself. So over to you. Otherwise it's lip reading all the way. So, Tim, over to you.
It probably would be better muted than unmuted. Thank you, Patrick. So, it's a good introduction, actually. The 2 types of schemes and the success rates, I think, reflects the makeup of the schemes. So, the Bounceback scheme has got a higher approval rate because it's a very simple scheme. It's you self-authorize the fact that you're impacted by coronavirus. You have a simple maximum of £50,000 based on a percentage of turnover, and our experience is very easy to then get the advance quite quickly, and in fact, the success of it has also been reflected by the only small number of non-high street banks that have joined in. So because most businesses were applying direct to their own bank and scheme, we're getting a high chance of acceptance at, frankly, below market rates in terms of interest rate, notwithstanding the government first year holiday period. So there have been a few additional lenders. In fact, today JCB Finance has become a Bounceback loan provider. But I would say Bounceback has been very successful. The slight concern is what potentially is then going to happen with the Bounceback money, which I'll come to in a second. If you turn to the Sybil's scheme, that is pitched at larger companies for higher amounts of money. And the process has been the same as the Enterprise Finance Guarantee Scheme. So they were using a route of underwriting that had been tried before, but unfortunately for a lot of businesses, they weren't able to, either they couldn't articulate well enough the ability to repay, or they had insufficient balance sheet strength to be able to pass the first hurdle. So there are pretty strict rules that are being enforced by the British Business Bank behind the high street that was doing the primary underwriting. So what you then saw was a huge number of additional Sybil's approved lenders, and that's the game we're into now. That's the evolving market. From our point of view, because most businesses went direct, either Bounceback or Sybil's loan, we then become involved with those that have failed to do so. And there are other routes, because it isn't a straightforward underwriting process, and there isn't a level of subjectivity. So the additional Sybil's lenders, and there's nearly 80 odd now that are accredited. Some of them are doing Sybil's loans, and some of them are doing Sybil's linked to another product. So it might be a Sybil's loan linked to invoice finance. It might be Sybil's loan linked to asset finance or trade finance, or it might be using the Sybil's guarantee as part of that product. Each of those lenders is underwriting within the overall government scheme, but using their own application of it, and also their own pricing. So when you get to Sybil's arena, there's a huge variation on commercial terms that are available. There's a kind of misnomer out there that people think that it's the same scheme, but it isn't. It's applied differently by each lender with different commercial terms. And this whole government-supported initiative has turned the alternative finance market on its head. So there are lenders that have stopped lending because they simply cannot cope within the new environment. There are approximately 50% of every hire purchase and finance lease agreement in the UK is on a COVID holiday, which is billions and billions and billions of pounds, which is effectively on stop. And when you talk to the lenders, their fear is that this is just a forerunner to a very large potential bad debt issue. As a result of that, underwriting, as you'd expect, has tightened up massively. So you have situations where there are lenders who have got an asset finance approval that was granted pre-COVID lockdown, which has been pulled, or another lender will let it go through, but they'll need new evidence to show that the lessee or the recipient of the hire purchase is capable of making the repayments straight away, because what they don't want to do is lend and then a month later have a request for a COVID holiday. The range of holidays differs massively, because if you're a deposit-taking bank with sufficient balance sheet strength, you can potentially be quite generous with the holidays. So there's a South African bank we deal with that gave 3 months straight away and is expecting 6 months holidays, and there is no test process. It's simply an application and gets approved. You go to the other end of the spectrum, and there are people that are funded individually, and they do not give a holiday at all. If you look at other alternative lenders like Funding Circle, so Funding Circle became a Sybil's guaranteed loan provider. It's by far and away the largest unsecured loan provider in the non-high street in the UK. And as a result of it, they've stopped doing normal commercial lending. So you cannot apply for a Funding Circle loan other than a Sybil's loan. And the approval rates are very low. So we do have a situation where if you're trying to get you're trying to get working capital into your business, it is easier to access the CBILS scheme via an alternative provider with a linked product. You're more likely to be successful. So it is complicated. It definitely needs a well-articulated application and projection. Cash flow is absolutely vital now going forward. If we then move on to what's kind of happening with all this money, because there is, as you say, it's about 30 odd billion pounds has come into the into 750,000 UK companies, and some are rushing to use that money to pay down higher cost finance, and it's an instant knee-jerk reaction. And I really would suggest that a good thing to do would be to wait a little bit to see how cash flow starts to roll out in the coming months. Because if you over anticipate a return out of lockdown to normality and that isn't achieved, but you've settled a higher cost loan, you may well have cut off a line of cash that you just can't get back, because you got that loan, say it's a funding circle loan at a rate historically, you will not be able to get that money again. So I would advocate caution in terms of what you do with the cash in the next few months. And I would definitely advocate looking at cash flow planning and looking at different models, maybe a best case, likely, and a worst case scenario, so that you can manage your cash. As we come out of it and we get into normality. Sorry.
Yeah, can I just sort of interrupt there? So I think you're making a great point about, I hadn't really considered that before, that if you're paying off a higher rate loan, you're sort of using cash that could otherwise be used to keep the business going. I know you can't have a B bills and a C bills. They're sort of almost mutually exclusive, I think, aren't they? But could you have two Bounceback loans at the same time, or is that?
No, not by, no. But you could have two CBILS facilities. So you could have a CBILS loan and another product at the same time.
Right.
You're limited on the Bounceback to the 50,000.
So it is a sort of a one-shot deal, isn't it?
Yeah.
You get your money. It's obviously got to be 50,000 or less, and you've got to use it wisely, because you won't get another one.
And for a lot of businesses, if you get the maximum £50,000, a lot of businesses, that will be the most cash they'll have had in their bank account for a long time, which is fantastic. And there is a certain logic to, well, I've got a funding circle loan at 10%, 12%, 6%, whatever the rate is. I'll pay that down and I'll cut my costs. That's true. But what you're doing is losing cash. And I can tell you, if we talk briefly about what's going to happen, the underwriting criteria going forward as we come out of this is going to get tougher and tougher and tougher. You're not going to be able to rock up to your high street very easily and get additional cash. And the unsecured market, like the funding circle and so on, I think is going to be decimated. So you need to asset finance, asset refinance, invoice finance, other secured products to access cash. So cash is king, more so than ever before, because you don't know what's going to happen. Most people, in most businesses. Aldermore Bank did a survey, I think a week ago. So, and they were talking about, most SMEs, what's the number, are going to see a 30 to 40% drop in income over the year. That's what's going to happen. But some of them be way more than that. 50. If you're in hospitality, it's going to be 50. So if you've got the cash, you need to keep hold of it.
And just another point, with the C bills and possibly the B bills facilities, people might think, well, it's got to be kind of regular loan finance, but it can be asset-backed or other forms of finance, can't it? Overdrafts or doesn't necessarily have to be a formal loan. Is that right?
That's correct. So basically, if it's a sub £250,000 lend, what the government is doing is taking out the personal guarantee element. So where a personal guarantee may have been required for an asset finance advance, an asset finance provider can use the CBILS criteria and structure to an advance against an asset that is secured on a CBILS guarantee. And also you get a payment holiday for a year. So it has suspended normal business in quite a lot of cases whilst this tranche of funds comes through, but that will stop. And it will also have implications for what happens afterwards, because availability of credit is going to be restricted. Because underwriters are going to look at businesses and they're not going to discount the CBILS and the Bounceback loan values that are there within the company. Still exist. Still got to pay them back. So it will be a factor in underwriting going forward.
Okay. We've had a question here, actually. It is a bit specific, but it involves these sort of challenger banks, the new kids on the block, Starling in this case.
Yeah.
And the lady's saying that they've had very little option to get a bounce-back loan because her husband's a sole trader. They have a personal account, not a business account. So what would be their options to get a bounce-back loan? And they were thinking Starling.
Yeah. So
sole trade account for that, and then getting a bounce-back loan based on that. But she's obviously had feedback about sort of people being turned down by these banks. Is that your experience?
So what's happening is those banks that are newly accredited are behind the game in terms of getting the implementation going. So Metro Bank has just been approved, and Metro's moved into. We've had quite a bit of dealing with Metro because they've moved into the southwest now. So their model was city-based, big branch, and then you work around that. But they've now got regionally based guys down here, and Metro do want to lend, and they are a new bounce back and CBILS accredited lender, but they're not ready to do it yet. So I would just because your high street lender doesn't have a bounce back option, you will be able to make applications elsewhere. But I think it's evolving. So I wouldn't think, right, that's it, it's over, because there will be other alternative providers that will consider it under the same criteria.
Yeah, so don't give up, I think is the...
Definitely not.
We've had another question. How can I reduce my finance costs? Now, okay, we've been saying that you don't necessarily want to pay down a higher rate loan to reduce your finance costs, but then you find you've got no cash. So what else would you recommend in that regard?
So if as a business you have credit facilities, they normally have a term to them, whether they're an invoice finance facility or an overdraft or whatever, and they should always be competitively challenged. So it amazes me that it's like following a football team your dad took you to when you were whatever age. You just assume they're going to do nice things to you. You assume because your dad took you to NatWest that they're going to really look after you. NatWest don't see it the same way. Anyone, they see it as a commercial activity, and they will have a varying level of rates that you can get based on negotiation. So there is, don't just renew and accept. It is worth challenging and look at the market. What I would also definitely say in terms of making sure you reduce your costs is businesses often apply for credit too late, particularly in a challenge situation, and they can see it coming, hoping it's going to get that iceberg that's coming towards them, and it is an iceberg. Better off looking at it earlier, applying for the credit early when they're in the best possible position, because it makes it an easier acceptance from the underwriter's point of view. And without plugging Westcott too much, involve your accountant, because a well-articulated application with cash flow, good management accounts will get you a lower rate. It will pay your accounting fees 10 times over. So it is, we know we get better deals when we've got the accountant involved than just coming up with their own information. So it's a bit of forward planning, and it is actually seeing it as one of the other things you buy in. You know, you've got to look at your finance as a commercial negotiation.
Yeah, thanks, Tim. That's always what I'm banging on about. Talk to your accountant now more than ever. a question really I would like to raise after having chatted to John Mitchell, who's our head of insolvency, I keep calling it, but business recovery he prefers to use. It's a bit fluffier, isn't it? And well, people might be getting these especially the Bounceback loans, to sort of as a short-term fix, but really not having because they're so easy to get. Is there a danger that all they're doing is just racking up more debt for their business? That these aren't grants; they're going to have to be paid back, and the business could then struggle in the future. Is that your experience?
Well, it is the case.
We don't know yet, do we?
No, we don't know, but it is the case that they've been easier to get, and you've got this year's holiday, and they are below market rates. It's all about the performance of the business thereafter, isn't it? And there will be factors that will be outside the business's control, and there'll be factors that are within their control. It depends what happens as you work through it. I really would recommend treating it as a separate pool of money you want to preserve as long as possible, and use for working capital based on the right decisions, because you've got cash flow and you know what's going to happen. And do you think
with hindsight, B-bills is a bit too easy to get hold of, perhaps?
Absolutely. There's going to be, sadly, there's going to have a high debt in it. It will do. But the billions of pounds that this horrible pandemic have caused in it all, I don't think it's mad, the amount of money. I think it's preserving that, and the furlough scheme is preserving the ability to fight again. And how do you distinguish? You can't even got the time to go through every company. So you're right, but I still think it's the right thing to do. And I think it's amazing how they've delivered it, really.
Yeah, considering that they seem to be getting a lot of grief for everything else, but these kind of reliefs seem to be, I'm on the CBI webinars most mornings, and, they are quite grateful for, in this regard, the government's actions in preserving businesses and like the JRS as well. So actually, if I can leave it with you there for the moment, Tim, we've got a few questions I'd just like to return to for Ian. Yeah. Well done.
I'll mute myself.
Tim, take notes. One of them relates to the self-employed scheme, and the question essentially is, can I still claim it even if the business is open? So, Ian, I presume yes, but...
It's subject to the caveat that at the point of claim, you still have to be able to say your business has been adversely affected by coronavirus, but there'll be very few businesses that haven't been. So, that's the main differential between the furlough scheme, the job retention scheme, and the self-employment income support scheme is the self-employed have been able to continue to work as much as they've been able to or are able to, and still claim the grant. So the original grant and this second grant will be available to them. So should their business reopen partway through July, they will be still entitled to the 3 months payment that will be paid out in August at a 70% slightly reduced rate, as long as they've met the conditions that they were self-employed in 2018-19 and have continued as self-employed since then.
Yeah, thanks, then, Ian. I would just sort of reiterate actually something you said about the statistic that surprised me was that 35% of potentially eligible sort of self-employed business owners haven't actually claimed yet. So what can they do? I presume it's doing the eligibility check.
Yeah, yes, eligible. Well, obviously the eligibility checker is there to tell you if you're eligible, and if it tells you you're not, you can appeal. Because we in this office had a couple of clients last week who I had told back in April, May, yes, as and when we're able to claim, you are entitled to claim. 2 out of 3 partners in a partnership. They've gone on to the eligibility checker and been told they're not eligible to claim. And what happened was amended tax returns were submitted in October of last year and hadn't been processed by HMRC. Now, we didn't know this because it didn't affect the tax payable. They weren't paying tax. We just using up more of their personal allowance. But it came to light that tax returns haven't been processed. So we've contacted HMRC and it should go through. And as soon as their computer system is updated, hopefully the grant will be paid out to them. But, you know, just because the computer says no isn't necessarily the end of the story. You can appeal, you can look at it. And some people just haven't been claiming, you know, maybe they're not adversely affected and they can't make that statement. But I would think most businesses have been.
Yeah. So by the 13th of July, so get your claim in or speak to your accountant if in any doubt.
Yeah, 13th of July for the original grant, the original 3 months, up to 7,500. Even if they missed that one, you're still entitled to claim on the second one if you were eligible under the original criteria.
Yeah. We just got a question just pop up there. Our business has increased, so am I correct in saying we are not eligible to claim? Well, I presume it's up to the 50,000 limit. Is that right?
Under the self-employed, obviously the eligibility in terms of profits were the average, or the 2018-19 profits were 50,000. So we're looking historic for there. But you have to say that currently, or since March, your business has been affected. Now, I suppose your profits may have gone up, but you could argue they might have gone up a lot more than they have. But in terms of customers and clients, suppliers, etc., but for the pandemic. So probably a difficult one to look at the government criteria as to what does it mean being adversely affected. But it could be, you know, staffing, customers, clients, you know, premises. I mean, if turnover would have doubled but has only gone up by 20%, you have been affected.
Yeah, I suppose it's when you're doing the claim, you know, you get to the box that says, has your business been affected by COVID? You know, you've got to think, right, okay, I think it has. I mean, what I've been recommending to clients is actually document their decision at the time. And so if there is any comeback, they can say, well, I did think I could claim because of X, Y, and Z. So, but just another query we've had from Amy, who's a sort of friend of the show. Hi, Amy. She's got a marquee business, and it just revolves around the claiming of the discretionary fund grant. And because they're a partnership, does it? Do they claim one per person, or is that one claim per business?
It's the business. So the partnership business is making the claim.
Okay.
So the partnership. So, you know, it will be a question of going onto the website, saying how many employees you've got. Obviously, the partners in the business are not employees; they are self-employed, and it is the partnership business with its partnership unique tax reference that is making the claim.
Okay, thanks for that. I've just had a message from another tax partner, actually, the head of tax, no less. We're not worthy.
So picking me up, is he? No?
Mark Tippett, yeah. He's just saying about the Starling Bank question that we attended to earlier. He's aware that co-ops seem to be accepting sole traders, albeit you have to set up a business account with them. So, yeah, just to sort of bear that in mind. What also, I think we'll draw it to a close in a sec. What struck me, I think, is that we are seeing the end game now, aren't we? Of you know, the end of October being when these reliefs and grants and everything else finishes. So I think it's the businesses, incumbent on businesses, to think, well, okay, what's going to happen post October, and just get their kind of plans in place there. I'm just thinking, is there any other questions? I think really that's we've covered off the questions we had. So I think I will kind of wrap it up there. If we haven't answered your question to your satisfaction, please just send us an email, events@thomaswestcott.co.uk, or if you've got a fresh question that you'd like to ask, we will attend to them. If you're a client of the firm, we might sort of ping it to your regular partner to get back to you. We're going to have a webinar next week on a subject as yet undisclosed. So look out for the invite to that. And finally, I'd just like to thank, Tim, or especially Tim really, but also Ian for their contributions this afternoon. And thank you also to, very much to you, our attendees. Hopefully see you next week. So have a great rest of the week. And as ever, channeling my inner Ron Burgundy, stay safe, Devon and Somerset. Cheers for now. Bye, guys.